Hello and welcome to Business Lunch. I'm Nisha Poddar. Straight to the markets. That's the big headline of the day, really, because Nifty 50, after breaking below the 17,000 levels, has seen some bit of relief coming in, but still 1% down in trade. And this, even these levels are sustainable or not, is to be seen in the second half of the trading session. At the moment, sensex are losing about 470 or 80 points in trade right now. As far as Bank Nifty is concerned, 1.6% down in trade. Remember, on weekdays, on global nervousness, it's the financials, the Bank Nifty, which has taken the charge in terms of performing on the reverse side, and therefore underperforming the key indices like Nifty as well as Sensex. Mid-cap index, that's where the carnage really likes, and as far as the weakness is concerned, and 2.2% down when it comes to the mid-cap indices right now. So that's the sum and substance. But my co-anchor today on Business Lunch is Mangalam Malu, who's standing by at the big wall to really decode the fall in the markets and give us a more exhaustive account of that. Mangalam.
But as far as the markets are concerned, notwithstanding the recent recovery that we've seen in the last couple of minutes or so, the Nifty is still down about 1,000 points from the highs that we hit on September 15th, which is closer to that 18,100 mark. And in doing so, the Sensex as well as the Nifty have both turned negative for 2022. That happened on Friday itself. So from September 15 highs itself, the Nifty is down about 6%. The Nifty Bank, which is an outperformer, still positive for the year by about 9%, has fallen a little more by about 7.5%. Why is that happening? Well, a bunch of factors for that. The first one is global risk-off after Fed's rate hike, as well as commentary, more commentary than the rate hike, because 75 basis points rate hike was priced in already. And that commentary led to the US 10-year yield moving to a 15-year high over that 3.75 mark. Importantly, the US dollar as well approaching that 114 mark, near a 20-year high for that. And that, as a result, consequently means that the Indian rupee has been at a record low, breaching the 80 mark, and thereafter now 81.6 thereabouts as we speak. And as a result of which, combined with the fact that India's valuation was nearly at a 2 times premium to the emerging market basket, led to the FIIs sell some positions. And that's what we saw. On September 21st, we saw 500 crore worth selling, 2,500 crore and 2,900 crores over September 22nd and 23rd. And as a result of which, by September, so far itself, the FIIs have turned negative in the cash market. And even in index futures, this is the expiry week. The FII positions are 80% on the short side, just about 20% on the long side itself. So what are the near-term triggers that we're watching out for our market? We do have a bunch of them. The first one, of course, is that the domestic market is doing well. We have been outperformers as compared to the world as well, because the Nifty, while it's down about 2% this year, the FTSE is down 5%. The Nikkei and Shanghai have been down 8 to 16%. Compare that to the US markets as well. It's down about 18% for the Dow. Nasdaq is down 30%. Some European indices also underperforming. So we're down, but we're still better than the rest of the world. Today's bounce happened from an important technical level, 200-day moving average at 16,993, and the near-term triggers that we have for our markets. The lower oil prices is a big positive. Consumption pickup ahead of the festive season is something that we'll be watching out for. Rupee being a fresh record low does well for exporters as well, and manufacturers will benefit from the China plus one factor. How much of that is priced in, and where do we go from here? Whether this outperformance continues or not is something we'll be watching out for.
A very exhaustive account. Thanks, Mangalam, for all the factors that we have to watch out for. But I would add to that the whole situation on the Ukraine crisis, the overall impact of that as well, tying in with interest rates as well as inflation and demand destruction that we have also been talking about. But one key aspect to watch out for is the rupee movement. Rupee opened at a fresh record low this morning, while the bond yields have also spiked. Lata Venkatesh is here with all the details on the rupee and money market overview. Lata.
Well, over the weekend, the fresh bad news for global financial markets was the way in which the pound tumbled because of tax cuts there. And that led to, as you just heard Mangalam say, the rupee the dollar go to fresh 20-year highs, 114, and US bond yields went up to almost 3.8 on the 10-year and 4.2 on the 2-year. Think of a typical fund. When the risk-free return, where there is no currency depreciation fear, gives you like 4% for a 2-year and nearly 4% for 10-year, then it becomes more attractive to move away from EM currencies. So we saw the rupee fall in the NDF market in New York, and we saw all Asian currencies today down. nearly 1%, between half and 1%, and the rupee had to follow suit. The Reserve Bank was there supplying dollars like it did even on Thursday and Friday, but it is not trying to protect a level. It did help the rupee end a little south of 81 on Friday, but today at 81.5, 81.6, 81.65, there was supply, but it was not giving an indication that it would, support a particular level. So traders are watching. How long will FIIs keep selling? At what point will they stop buying dollars? At what point RBI says this far and no further and starts supplying torrential amount of dollars? It's really wait and watch. Since the Reserve Bank protected a whole number like 80 in the past, people were watching for 81. Now they will watch for 82 and see if that's protected. Simultaneously, as the US yields went up, Indian yields have also risen. So the crude fall is not that big a factor. We are moving in sync with global yields. And now the yield on the 10-year is higher than what it was on June 30th. So this becomes a mark-to-market loss for the banks. And that may explain why the financials, which were such hot favorites 2 weeks ago, have now become another factor of sale in the market. So all these are going to be watched. The Citizens Monetary Policy Committee of CNBC, which is a shadow MPC, is looking at a 50 bips hike, and that's exactly what the markets are pricing in. The 1 month OIS and the 2 month OIS are factoring in a 50 bips rate hike on Friday, and the 1 year OIS is looking at a 6.9 terminal repo rate. So quite a bit of rate hike expectations.
All right. Thank you, Lata, for getting us all the details. All eyes would be on the Reserve Bank of India's monetary policy coming soon as well. But the interest rate hike is being priced into the market. But looking at all the aspects which is really impacting our equity markets on a slightly more optimistic note, well, crude prices have corrected, with Brent now trading at about 8-month lows of around $85 a barrel. In fact, Manisha Gupta is right here to give us a sense on how the oil price trajectory is moving and what are the factors which are really impacting it. Manisha.
Well, this clearly isn't a great start to the week, where we have seen a sell-off come in across asset classes. And crude oil prices, the decline has been much sharper. We saw 5% of a cut on Friday, and we are down by nearly 1.5% to 2% even right now. So it's an 8-month low that we are dealing with in sense of crude oil prices. If you look at the last week itself, it was 9% down. And the crude oil prices actually have been declining for 4 weeks now, totaling it to 19% of a decline in last 1 month itself. Well, the rate hike that we have seen come in from US was factored in, but the aggressive rate hikes expected for the rest of this year is something that the markets are worried about. The demand has been declining, the data has been on the weaker side, and the US dollar really seems to be taking it to the higher side at 114 plus kind of levels. It's the new 20-year highs that we have seen for dollar index, which seems to be weighing many of these dollar-denominated commodities. When you look at the business and construction activity in European Union and UK, that has continued to decline. It actually has been a day where we have seen nearly 6 international currencies hit an all-time lows. That seems to be impacting markets as well. For crude, it would be interesting to see on what OPEC and allies do in the next week's meeting, whether they do curb more output in the market there, then that would give some support to the crude oil prices going forward. Another interesting point is the Chinese holidays, which are coming in from 1st to 7th of October. Whether or not we see trading exaggerated ahead of that, what is the kind of demand that we would be looking in as October starts is something that the street will also keep an eye on. In the prices, while we are oversold, markets do believe that there is still some downward momentum remaining here.
All right, Manisha, thanks so much for all that detail coming in on crude price movement and more downside expected in coming times. But take a look at the markets. A quick check on that. Bank Nifty is seeing some bit of buying. Some of the big players like IndusInd Bank, SBI, ICICI Bank, they all have seen some buying, and that is giving a little bit of relief, but still 1.5% down. In fact, the US futures had turned positive, and that was probably giving the market a little relief, but in a very tight range. So keep an eye out on the markets. We'll take a short break on Business Lounge, but we'll come back with more news and updates of the day. Don't go anywhere.
Welcome back here, watching us here on Business Lunch. Let's talk about individual stocks then. One of them, which is among the top losers for the F&O space in the last couple of trading sessions has been Power Grid. Vivek joins in with what exactly is the reason behind this fall. Vivek.
Well, that's right. So Power Grid has been in focus on the back of the fact that there have been multiple reports indicating that the company may be asked by the power minister to purchase PFC's 52.6% stake as far as REC is concerned. Now, this would involve a significant outlay as far as the Power Grid's investment is concerned. And so far, you've not really seen Power Grid make such a large capital allocation in a non-core business. So now this particular development has not been confirmed by either the Power Minister, Power Grid, REC or PFC. But what's actually happened is that markets as well as analysts on the street have started pricing in this development. In fact, Jefferies has actually put out a note saying that this could be a significant near-term headwind as far as the stock price of Power Grid is concerned. In fact, they've gone as far as to quantify that this could have a significant negative impact as far as the dividend payout is concerned. They believe the dividend payout could fall to 4% versus the 6% that investors enjoyed earlier. What they're also saying is that, so far we've actually seen other PSUs make investments outside on ministry directives, but Power Grid was relatively insulated, and this they believe could actually act as a derating catalyst as well. So a lot of negative news flow, and this is something that is actually keeping the stock quite subdued in today's trading session.
Thanks so much, Vivek, for joining us with all the details on Power Grid. Let's move to the new kid on the block, and we are talking about the listing of the day. And I would say one of the probably companies which could make use of the ECM window or the window of opportunity that was available in the equities markets earlier. Now, it was a strong debut for precision cage bearing manufacturer Harsha Engineers. The stock lists a 35% premium to the issue price. And earlier today, we spoke to the management, the CEO of the company, Vishal Rangwala, who expects the company to outperform the industry growth going forward. Take a listen.
As I mentioned, there are a lot of factors going into that. Industry, what we estimate is going to grow 6 to 8% is the industry growth. And again, as I mentioned that because of China Plus One and outsourcing, quite confident that we can hit the teen numbers. Again, difficult to put in an exact number on that. We don't expect to do, debt raising anytime soon. We have investment plans to support our, customers' growth and in line with that. So next 2 years, we don't expect to raise significant debt. We will probably work with some working capital if there are, relatively cheaper side because we do a lot of exports and we get a lot of those opportunities. But beyond that, we don't expect to raise significant debt. We target about 110 days of complete end-to-end cycle for us.
All right, so that's about Harsha Engineers, the stock of the day. But the other sector which is in focus is the auto space. Tata Motors has now launched a new range of vehicles which it's terming as the future of pickup trucks. Jude is standing by with a report from the launch event. Jude.
Well, Tata Motors going all guns blazing by launching not one, not two, but 4 LCV pickup trucks insofar as its future of pickup trucks range is concerned. A little earlier in the day, Tata Motors announced the launch of the Yoda 2.0, the Yoda EX, the Intra V50 and the Intra V20. In fact, the last one is the first of its kind bi-fuel pickup truck, both operating on diesel and CNG. Tata Motors, in fact, announced that each of these trucks will be priced between 8.67 lakh and 10.74 lakh rupees per vehicle. In fact, Tata Motors ED Girish Wagh stated that the company is targeting sales of 1,000 of these brand new pickup trucks across dealerships in the country today itself. In fact, Girish Wagh also went on to state that the company was looking to invest an average of 2,000 crore rupees in its CV space every year without breaking down in terms of each of these segments and how much investment they would attract. So Tata Motors really pushing the button in terms of focusing on the LCV space, stating that there was ample room to grow insofar as this segment is concerned, and 4 launches in one day really, going the extra mile in underlining that task and target.
All right, Jude, thanks so much for giving us that ground report on that big launch coming in from Tata Motors. But really, the auto companies are taking it on the chin, 4 to 5% down on Tata Motors. And we'll stay with the auto sector. We'll talk about Maruti, which is also down more than 4% in trade at the moment. And it started the retail sales of the Grand Vitara, which are starting at an ex-showroom price of about 10.45 lakh rupees, and an upper range of Grand Vitara will be at 17.05 lakh rupees. The Grand Vitara's, smart hybrid will cost between 10.45 lakhs to 17.05 lakhs, while the intelligent electric hybrid variant will cost between 17.9 to 19.65 lakh rupees. Well, Mangalam, looking at any of these?
No, not a pickup truck in India for sure, because that's not for passengers anymore, and the roads are not conducive for that. But what we do is take a short break, come back, we talk about the markets as well as some GST-related updates.
Welcome back. You're watching Business Lunch, and take a look at markets. Yes, it has let go of the levels even more, 215 points down when it comes to Nifty 50, but still holding above that 17,100 mark. A deeper cut has come in the financials. Bank Nifty 1.8% down in 20 minutes. It was from 1.6%, now dipped further down. So keep an eye out on all the key indices. All of them have seen further weakness in the last few minutes of trade. Let's also hear out Revenue Secretary Tarun Bajaj speaking about the windfall gains tax in New Delhi.
So it is reducing, no? So let the data come and whatever the data say will do.
Not before the next review.
When is the next review?
I think first. Today is 26.
The first to hike?
The first. So just to reiterate, crude is around 85 odd.
All right, on to some macro updates. Really, sources suggest that GST collections for the month of August are likely to be higher. In fact, my colleague Timsi Jampuria gets us all the details and the understanding on that. Timsi, tell us.
Well, that's right. When it comes to the GST collections, that seems to be giving a lot of cushion to the government, especially when it comes to tax collections. And this time, the GST collections, which are likely to be announced on 1st of October, these numbers will be for the business activity conducted in August, for which reporting was supposed to be done in September. As we speak, it is still on. And yes, that's what indication is, that the collections are likely to be between in the range of 1,47,000 odd crore rupees till 150. Now that is a number. Remember, we are yet to touch 1.50 lakh crore rupees, and if we touch that, this could be the highest collections ever in the entire tenure of GST since its levy was being enacted in the country. Let's see what is it. But when it comes to the factors that is actually getting this growth, or that is pulling up the growth in terms of GST collections, well, it is first the festival buying. Remember, in August, we had Raksha Bandhan and a few other festivals. Plus also, Tier 2 cities are showing a lot of good growth in terms of buying. There's a demand revival across the country, especially in sectors such as auto, FMCG, consumer goods, apparel, etc. is actually pulling a lot of growth. And not to forget, some critics also say that inflation is also to be blamed in terms of getting healthy collections, because prices have risen across sector segments,
right,
and thus a higher GST is something that we'll have to see. But yes,
right,
let's see what is the final number that the government announces on 1st of October.
All right, Timsi. So some bit of festivity as well as inflation may boost the GST collection. With that, completely out of time on this edition of Business Lunch. But market really not getting any relief, lower than what we really started Business Lunch at. So keep an eye out for that. Mid-cap radar comes up next.